So we are doing October-November 2023, paper 21. Question number 1 is for what?
It's partnership.
This is partnership.
Yeah.
Right?
We have full set of accounting records for her business. She has provided the following
Okay, so they
info.
maintain a full set of accounts for the business. This balance is on 1st October 2022. And this is 30th September 2023. That means this is the start of the year. And this is the end of the year. Am I correct? Yes?
Yes, yes.
Okay. What do they want us to find?
The closing inventory.
Okay, how do you find the closing inventory?
So they've given that Laila was unable to physically count the inventory at 30th September 2023. The inventory was valued at 14,400.
Okay.
And then in the next adjustment, they've said that between 1st October 2023 and 4th October 2023, sales were 3,400 and purchases were 1,850.
Okay.
So to calculate this, I would minus the 3,400 from 14,400. And
Why will you
then,
minus 3,400? This is not the selling price, right?
yeah,
So closing inventory is always valued at what?
the lower value will be cost price.
Cost or NRV, whichever is lower.
Yeah.
So how will you minus 3,400? You will minus from 14,400. You will minus the cost of sales, right? Yes
Okay.
or no?
Yeah.
Okay. Tell me.
So wait, cost of sales we'll have to calculate na then.
But between 1st October and 4th October, these goods were sold. So will you
Yeah.
minus this?
3,400 you want minus now because you need to find
Listen to
the
me.
cost.
You have your closing inventory on the 4th of October. Okay? Closing inventory on the 4th of October, that means after the year is ending. Year is ending when?
September 30th.
Your year is ending 30th September 2023. So 4th October 2023, your closing inventory is this much and year is ending on 30th September. So that means you need your closing inventory on 30th of September 2023.
Yeah.
Okay. Between 1st October and 4th October, you have sold something. So that means from this, you have to add back what you have sold.
Okay, yeah.
Because you sold after the closing date. If I sell after the closing date, that means it is income of next year.
Yeah.
So whatever this is on the 4th of October, I will add back the sales because I want the closing inventory of 30th September.
Yeah.
Yes or no?
Yeah.
Okay. So that means I will add back what I sold. Yeah?
Yeah.
I will add back what I sold, but the cost of this I will add. Okay?
Yeah.
And what I purchase would be included in this 14,400.
Yeah.
So I will minus what I purchased. Think properly, digest, and then tell me.
Yeah, Miss, I got it.
This 14,400 excludes sales and it includes purchases of the next year. So I will remove the purchase of next year and I will add back what I sold. Okay. Now tell me what will be the cost of sales. Sales are made at a markup of 25%.
Yeah.
Markup is on
Cost.
So profit is how much?
Yeah.
Okay, that means it is 1/4 on cost.
Hmm.
So it will be 1/5 on
Sales.
selling price. What is the selling price?
3,400.
So 3,400, what is the profit?
So 680 will be.
680 is the profit that is included in 3,400.
Hmm.
So 3,400 minus 680 is how much?
2,720.
So what is the value of your closing inventory? $14,400 plus
1,527.
2,720 minus 1,850. So your value of closing inventory is $15,270. You need to be very clear.
Yeah.
Okay. Now, what is the next thing that they want you to do? They want you to prepare a statement of profit or loss for the year ended 30th of September 2023. That means you need your revenue minus your cost of sales.
Hmm.
You get your gross profit. You will add other income and minus other expenses. Are you with me?
Yeah, miss.
So your first target is to go and get your revenue. Do you have your revenue?
No, they've not given, but I think it will be calculated.
So we can calculate by making what?
The trade receipt.
SLC.
Yeah.
SLC always has which balance?
Debit balance.
So I will use this.
Yeah, so over here on the debit side, you will put 4,540.
So on the debit side, you will give 4,540. Your SLCA has a debit balance. Okay,
Yes.
then
Then 5,5,390 on the credit side.
okay.
And then
Why on the
365,
credit side 5,5,390?
because on the debit side, only two things come and
So
three
your
other.
money received is 5,5,390.
Yeah.
Anything else related to trade receivable?
Yeah, 3,650.
All sales and purchases are made on credit.
Hmm.
So that means I have to find my credit sales. This I have to find. This is
Hmm.
the balance begin down. I have been given the balance close down how much?
3,650.
3,650. So what is my credit sales?
5,4,500.
Huh?
54,000.
55,390 plus 3,650. This is 59,040 minus 4,540. So this is 54,500. Am I correct?
Yeah.
So your credit sales is 54,500. Whatever trade receivable account you've made, you show it in working note number 1.
Okay.
Now you can, I'll pause the video for some time. You can find out your opening inventory, purchases, closing inventory, and come up to the gross profit to me.
Okay.
Okay.
Yes. Hmm.
Now I have to find out my purchases. Am I correct?
Yeah.
So first I will take the opening balances that is given to me. My
Hmm.
opening inventory is I'm going to find the cost of sales basically.
Hmm.
So I have to find out opening inventory plus purchases minus closing inventory. Are you with me?
Yeah.
Opening inventory is how much? 12,030. Yes.
Yes.
Now I'm going and seeing. I have trade payables opening balance because I'm reading the sum. I don't know anything. So I am just making a PLCA. Trade payables always has a credit balance. So I'm writing 3840 over here. Are you with me?
Yeah.
I have already used this information. I've also used this. Payment to trade payables will come over here on the opposite side, 46 to 80. Yes?
Yeah.
Okay, fine. I'm going ahead. We have started to prepare our financial statements. Following figures are available to transfer to the profit or loss account with no adjustment. Can you tell me what does this mean?
Mm. Which means they haven't been accounted for, like other payables and other receivables have not been
These
minus.
are available to transfer to the statement of profit or loss account
Hmm.
with no adjustments. That means all the adjustments has been done
Oh,
and you just have to transfer it to the profit and loss account.
okay.
So insurance is other expense,
Yeah.
light and heat is other expense,
Hmm.
loss on disposal is also other expense.
Yeah.
That means I have nothing to do with whatever insurance I have paid over here, whatever light and heat I have paid over here. Profit or loss on sale of non-current asset has already been accounted for us. Think and tell me.
Yeah.
Okay. Opening outstanding for light and heat is already accounted for us and insurance is also accounted for us.
Hmm.
Are you with me?
Yeah.
Okay, fine. Non-current assets are given to us at a carrying value. Are you with me?
Yeah.
If any non-current asset is there, I should remember that I have to remove depreciation.
Yeah.
I'm just reading the question and analyzing.
Hmm.
And there is also a sale of non-current asset. Are you with me?
Yeah.
If I have a sale of non-current asset and I have loss on disposal of 120, can you give me the net book value of the non-current asset?
So, sale of non-current asset was 860 and it was sold for, the loss was 120. So the net book value was 980.
860 plus 120.
20.
So non-current asset was 22,180 minus the non-current asset that is sold. How much is it selling for? 860 plus 120, 980.
But that is the net book value, no?
That is the net book value of the non-current asset sold.
Hmm.
So 22,180 minus 980. So 21,200 is the balance net non-current assets that we have.
We did 22,180 minus 980, no?
Hmm. Are you with me?
Yeah. So
Then,
21,200 is the assets that we have left.
yeah.
Hmm.
Okay. The asset that we have left, maybe they will give us the closing value so that we can find out depreciation.
They've given us 10% depreciation.
That we will see later.
Hmm.
But now while reading, I was reading to find out purchases. So while
Hmm.
reading, I have got three expenses. So what you think you should go and do?
The expense?
Hmm.
Okay.
Go and write it in other expenses. Insurance, light and heat, and loss on disposal.
Hmm.
With me?
Yeah.
You write it, I'll wait for you.
Yeah, miss.
Can you tell me what was the opening inventory?
Opening inventory is 12030.
Okay, 12030. We were finding purchases, but right now we've not yet got the purchases. But I have got my other expenses, 3 other expenses. Yes?
Yeah.
Okay, fine. We'll go ahead. We will read the sum again now. What is done? This is already done, right?
Yes.
All sales are made at a markup of 25%.
Hmm.
So if sales are made at a markup of 25%, so I could
Oh,
say minus this is going to give me this. So I have gross profit 1/4 on costs. So it is going to be 1/5 on the selling price.
yeah. So you'll take 1/5 into 54,500, right?
Yeah,
But that'll be for closing inventory, not for gross profit.
it's profit, right? Goods are sold at a profit.
Yeah.
So that means your gross profit is given a percentage.
Acha, okay. I thought it said that cost. So we'd find cost of sales using this.
But I don't have cost of sales. I have my revenue in hand, so I can find it, right?
Yeah, okay.
So gross profit is how much?
10,900.
If you minus the revenue and gross profit, you have your cost of sales how much?
43,600.
43,600. With me?
Yeah.
Fine?
Yeah.
Let's go ahead. Sales and purchases are made on credit. Now I have to find out what I have to find out the purchases and closing inventory. Are you with
Yeah.
me?
Closing inventory we already found, right?
Sorry, purchases and where we found closing inventory? Yeah,
We
we
did
found
not.
out the closing inventory. What is the closing
Yeah.
inventory? 15 to
15 to
70.
17.
So we can find out purchases.
Yeah. So we'll do 43,600 plus 15 to 70 minus 12030. So
Hmm.
you get 46840.
Yeah, this was our
Then,
balancing figure, the reverse sum.
hmm,
Okay,
yeah.
now let's read. This is done. This is done. This is
Hmm,
done. This is done. There were no additions to non-current assets. So 21,200 is our non-current assets with us.
yeah.
All non-current asset is depreciated at 10% using reducing balance method. Is this the reduced value?
Yeah.
Because this is the carrying value.
Hmm.
So if I'm going to depreciate at 10%, so
We'll take
21,200 into 10% is how much?
2120.
So 2120 will be our other expense of depreciation.
Hmm.
Closing inventory is done. This was related to closing inventory. So we've taken into account all the adjustments. I will just put depreciation over here. Two one two zero. So total of expenses is 8840.
8840.
2060 is my profit for the year.
Yeah, 206.
Done.
Yeah.
I have to prepare the statement of financial position. Where you have to find your equity, other receivable, other payable, trade payables. So you have to prepare your full statement of financial position. I'm giving you some time. Try to first analyze and think, and then we will prepare it together. Okay?
Okay. Hmm.
But you have to prepare our statement of financial position. So we have to find out certain things, what they have asked us to find out, and using that information, we will prepare our statement of financial position. Try, and then I will come back.
Hmm.
We have to prepare the statement of financial position, and they have asked us to find out the equity on the 1st of October 2022. When they're saying that you have to find out equity on 1st October 2022, this is what date, opening or closing?
This is opening.
So they want us to find out opening equity. And they want us 30th September other receivables. They want us to find other receivables, trade payables, and other payables.
Hmm.
Are you with me?
Yeah.
Okay, so I'm just copying this and I'm pasting it on top. That is what they want us to find out, that we are keeping on record. With me?
Yeah.
Yes or no?
Yeah, miss.
Okay, fine. Come on. Other payables. It is light and heat and insurance. Other payables is what? Current asset or current liability?
Current liability.
Okay, other payables is a current liability. And other receivables is a current asset.
Yeah.
Okay. Now I want to know other receivables and I want to know other payables. So I have opening other payables of light and heat and insurance. What I do is I will make two accounts. I will make a light and heat account and I will make an insurance account. Are both expenses for me?
Yeah.
Okay. What is the format of expense account?
Popo B.
Popo B. Okay, fine. So this is other payables. So this is it prepaid or is it outstanding on the first date?
It's outstanding in the first year.
It is outstanding on the first date. And what is it? Light and heat. So if I say B, this is outstanding on the first date 210.
Yeah.
And this is prepaid on the first date 480. Are you with me?
Yeah.
Okay, fine. This is trade payables on the first day. This is trade receivable on the first day that I do not need as of now.
Yeah.
This,
So this
can you
is
tell me, can you find out equity on the first date?
Miss, by equity you mean inventory, right?
Equity means shareholders' funds, capital.
Yeah, so how will I get that from this?
You have all your assets with you on the first
Yeah.
date. You
Yeah.
have all liabilities with you on the first date.
Yeah.
So can I say all assets minus all outside liabilities
What
would
will
give
give
me
you?
my equity on the first date?
Yeah.
So inventory is what? Debit.
Yeah.
Non-current assets is what?
It'll be debit.
Other payables is liability. That means it is credit. This
Yeah.
is debit. This is credit. This is debit. Or alternatively, I could say this is asset, liability, asset, liability, assets. So all assets minus all outside liabilities. Can you give me the amount?
Yeah. Yeah. 35180.
How much?
35180.
Are you sure? Okay, 35,180.
Hmm.
I also have my summary of the bank account, which has the opening balance of 1220. So this is
Yeah.
bank overdraft, right?
Hmm.
That means it is a current liability.
Yeah.
Okay. So even this would get subtracted from this.
Yeah.
So 35,180 minus 1220.
So the balance begin down will be a liability because it's overdraft.
Yes.
Okay. So 35180 minus 1220. So 33840.
33960. I did on my calculator. Three three nine six zero.
Okay.
Yeah.
Yeah.
Done.
Yeah.
Okay, fine. Now tell me, this closing balance will is it current asset or current liability? Because I have to make my statement of financial position.
This closing balance is a current asset.
Think properly.
Oh no, this is balance begin down, so it's current liability only.
This is current liability. Okay.
Yeah.
So just remember this. Now I am marking, keeping in mind what?
So this is current liability.
Yeah. So I'm marking, keeping in mind the SOFP, statement of financial position. Are you with me?
Yes.
Okay, fine, no problem. I have my opening equity. That means I have my opening capital balance 33,960. If I
Hmm.
have to make a statement of financial position, do you know the format of the capital equity?
Yeah, I know.
Say,
So there is equity on the first date.
yeah.
Then there is add additional capital
Mhm.
minus drawings plus profit, and then minus the closing.
Then you will get the closing.
Yeah, you will get the closing.
So I have the opening with me.
Hmm.
How much is opening?
33960.
So I have opening 33,960.
Hmm.
Profit I found out, right?
Yeah.
What is profit?
Profit is 2060.
And I have my drawings.
Yeah, they've given you 3850.
So do I have my closing equity?
Yeah.
How much?
32170.
I have my closing equity as 32,170. Very good. Okay.
Hmm.
Come on. Now over here, I have to find other receivables, other payables.
Yeah.
And I have to find out trade payables closing balance.
That I found.
So I'm making a trade payable account.
Yeah.
Trade payable has a credit balance of 3840.
Hmm.
Below that credit purchases we found out.
Yeah. 46840.
How much?
46840.
That we found out as balancing figure, right?
Yeah.
46, how much?
46840.
840.
Yes.
Then I have payment to trade payables. How much?
46,280.
46,280. So can I get my closing trade payables?
Yeah. 44,000.
How much?
44,000.
I am getting 4,400.
Wait, then I must have just added another zero to it.
Yeah,
Yeah.
4,400. So I got my closing trade payables is 4,400.
Hmm.
This account done, I am removing it. Okay.
Yes.
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 Now I have to see this insurance paid. How much is insurance paid?
210 is
Insurance account is here.
Actually, first we are doing insurance. So
Because
480 is
I'm seeing the first thing.
okay. So other receivables under insurance is
I
outstanding.
don't know
So
it's other receivables or payables. I'm just doing Popo B.
okay, okay.
With me.
Hmm.
So
Yeah.
3,580 is bank. Sorry, 2,560 is paid for insurance, and 3,510 is paid for light and heating.
Yeah.
Sure?
Yeah.
Okay. They've also given me the expenditure for the year for insurance that is available to transfer to profit and loss account.
Yeah. So insurance pay, you will put it on the credit side.
How much?
2720. 2720.
And for this light and heat,
Light and heat is 3880.
very good. Is there anything else related to insurance or something I don't see anything?
No.
That means I will close the account. Let me first close this account. Which side is more?
The debit side.
2,560 plus 480. 3,040 minus 2,720. 320. Are you with me?
Yeah.
320 is prepaid. That means it is other receivables or other payables.
Other receivables.
Okay, prepaid expenses. It's the current assets. So 320. Yes,
Yeah.
light and heat close. Credit is more. 210 plus 3,880. It's 4,090 minus 3,510. 580.
Hmm.
Other receivables or other payables?
Other payables.
Other payables. With this, I have whatever they asked me to find out, I found out.
Hmm.
Yes?
Yeah.
Yeah?
Yeah.
Now I start with my statement of financial position. Non-current assets, what was the net book value that we got?
Minus 2200. Net book value was 21,200.
21,200.
Yeah.
And if we remove depreciation from it, then
19080.
so 19080 would be the carrying value of your non-current assets.
Hmm.
Okay. Are you with
Yes.
me?
Yeah.
Fine.
Yeah.
I am making my statement of financial position.
Okay.
First thing, I will have non-current assets. This is at carrying value. What was it?
It'll be 19080.
19080. Non-current assets, and you have current assets. What is then current assets? Closing inventory, trade receivables, cash in hand, cash at bank. But we already saw that we have a bank overdraft, which is a current liability.
Current liability.
With me?
Yeah.
And other receivables.
Yeah.
We had found out the closing inventory, how much?
Closing inventory is 15,270.
Trade receivables, closing balance was given to us. 3650. Other receivables we found out.
320.
So the total is 'This will become my total assets. Are you getting this figure?
Yeah.
Now equity. Because they've used word equity, when we will use the word equity. So we found out this. We found out beforehand only, right?
Yeah.
So just we'll write it.
So it's opening plus profit minus drawings will be closing.
I need the main amount in the last column. Correct?
Yeah.
Then you don't have any non-current liabilities. You have
We
your
don't.
current
No,
liabilities.
non-current liabilities we don't.
One would be bank overdraft. Then you have trade payables. And you have other payables. Trade payables, we found out the balance, right? 4,200. And other payables also we found out 580. What is the bank overdraft that we got from the receipts and payment account? The opening credit balance or the closing debit balance?
Yeah.
So this is 6150. So you have your total equity and liabilities. Are you with me?
Oh, yeah, I'm just writing. Come
on, let me discuss this and then you can do.
Okay.
For provisions of Partnership Act 1890 that applies in the absence of agreement. If there is no agreement, what happens?
Half and half you take.
If there is no agreement, tell me what happens.
You take half you like split the profits equally.
Profit and losses is shared equally. What else?
Drawings are taken at 6%.
No interest on capital.
Hmm.
No interest on drawings. No salary, no commission. But interest on partners loan, how much?
6%.
5%.
Okay.
Disadvantages of maintaining a full set of accounting records. Costly.
Okay.
You may have to employ someone. Yeah.
Yeah.
Owner may not have knowledge. And experience to make it. It may decrease profits because of extra expenses. These are the only things, because the only disadvantage of making full set of records is you don't have knowledge, or it may be costly, it may be time consuming,
Okay. Good.
or it may be time consuming. So we complete the first question of October, November 2023. Paper 21.